Manishi Raychaudhuri is with us, Chief Executive Officer at Emmer Capital Partners. Manishi, good to have you with us here. Thanks for joining us. I want to start with this one. Muthoot, if you have any views, gold loans, what a takeoff it's been for Muthoot. 2024, it used to be 1,500 rupees, Manishi.
Well, I wouldn't have an opinion on a single stock, of course. But yes, in general, if you do have a situation where gold prices continue to move up despite the recent fluctuations, then obviously the volume of gold loans and the kind of interests that can be charged, they would also stay healthy. So, it's ultimately it's all a call on how gold would perform over the longer term. And on that question, I am actually convinced that despite the recent fluctuations, the recent wobbles that we have had, I think in the medium term, gold prices would stay healthy. Central banks continue to buy. It remains a relatively safe haven destination during times of geopolitical tensions. And all these reasons are not going away in a hurry.
That's as far as gold financiers are concerned. Manishi, hi, good morning. So we were, just before you joined us, we were looking at the numbers out of Bihar, and right now they seem to be going definitely in favor of the NDA, right? I'm not sure if it really changes the needle at all for the market, barring that there was a little bit of nervousness. So we had some profit taking yesterday, and maybe it gets the bulls get a bit of a fillip up if this is indeed the final result. But do you see any other bearing with respect to this result? Either in policy making or just market sentiment, and market anyway is more focused right now on the trade deal and on earnings, I guess.
Right. So it's clearly an underscore as far as policy stability is concerned. It gives the ruling party at the center, the BJP and the NDA, some more wiggle room at this point of time. Remember that there were some important decisions that were actually not being made, or at least anecdotally, that's what we hear, before the Bihar elections, in terms of engaging with the United States and, the kind of discussions that need to be had as far as agriculture and dairy are concerned. These are very sensitive political issues. And I think, both sides, India and the United States, India in particular, were not able to arrive at those decisions pending the Bihar election. So obviously, it opens up avenues for, some of those important decisions to be finalized now. We must also remember that now we have an American ambassador in India, who has a direct line to President Trump. I mean, he's not only been the personal advisor over there, he has also been, very close to not just to President Trump, but to his entire family. So I think it's an important signal that the U.S. wants to re-engage. That engagement had fallen off, in the middle, but it's clearly on kind of getting mended, or at least that's the signal we are receiving.
All right. Hi, Manishi. We hope that Mr. Trump is on board as well, because thoughts can change on a dime, but nothing wrong in hoping, and hopefully we hear something sooner rather than later. That said, let's talk about various themes. I recall that, we have chatted about the quick commerce space in the past and, just getting quite competitive in China. At some point of time, we had mentioned that the growth rates could moderate as well. Some of these stocks have actually declined considerably from the recent peak, whether it's fear or with regard to profitability, or whether it's fear with regard to a bigger competition coming in there. What's your view on this space, and would you be positive on it?
See, in the longer term, I think these quick commerce, think of Blinkit is a part of the matter. So they have a lot of penetration yet to execute. As of now, I think they are active in the top tier, the tier 1 and tier 2 cities, but the runway for them is still quite long. So in a sense, India, as far as food delivery, grocery delivery, and other services are concerned, India is possibly about 8 to 10 years behind China, because in case of China, the likes of Meituan, and a few others, the Ilimi by Alibaba, they actually came up, in the mid-2010s. And importantly, these companies have constantly reinvented themselves. They have added new services. They have possibly addressed new customer requirements at regular points in time. So that's, I think, something that the Indian companies would also have to think of. So yes, I mean, I think, logically, they do have a long runway. There's a lot of growth still left on the table. Valuations, no doubt, are a concern. The Chinese companies are way cheaper than the Indian ones. But then you have a lot of growth on the table for the Indian ones.
So you'll be a little bit positive on that?
I would think so. I mean, selectively, one can be positive on this space. We don't really have any exposure to that space in their regional model portfolio. I run an Asia ex-Japan model portfolio. But, it's a sector that's clearly worth looking at closely.
Okay, so tell us about what you have in your portfolio then. From the Indian markets, what are you quite bullish on? We've gone through a decent amount of a time correction, not a big price correction, but various pockets will still look up. So tell us.
Right. I'll name 3 or 4. Number one, we have financials, the private banks. It's something that I've been harping on for quite some time. And it's only over the last 1 or 2 months that the large frontline private sector banks have started moving up. Encouragingly, we have seen that old concern of retail loans going sour. That has been sort of underplayed by the leading private sector banks in the most recent conference call chatter. So that's clearly the first, the top sector exposure that we have. Second, we also have the consumer discretionaries. We have a significant chunk in the auto OEMs, private, personal vehicles, and, even tractors and other SUVs, obvious names that you can think of. I would also say that some of the more recent exposures, like jewelry, organized sector jewelry in India, it is partly a play on gold prices, but that's another sector we do have over there. Third, industrials. Not only the large conglomerates, but also some of the defense names. And I was very careful of this sector, cautious of this sector, even about 1 or 2 months ago. But recently we have added after this sector underperformed and the earnings growth forecast stayed healthy. Finally, some of the conglomerates that are not only exposed to, say, retailing or telecom or petroleum, so which are kind of a broad spectrum play on India. Right. So these are the kind of sectors and stocks we have. Conspicuous by their absence of IT services, I still remain quite negative on that sector. So in a nutshell, that's it.
Okay. That gives us some perspective on how you are sort of looking at the sectors over here in India. Quite helpful, Manishi. Thank you very much for joining in, and we look forward to another call soon.